Torey, Eisenman, Benchmark Real Estate Group with Brad Siebert from the mortgage firm. We're going to talk about the home buying process a little bit today and the lending process. So I think people get really frustrated just with the process of why do I have to give this to the lender? Why can't I do whatever? And we have a video recently done by one of our customers that went to a bank to get their loan. They ended up closing a week later than they were supposed to. There was just they couldn't reach anybody at night or on a Saturday, and they became frustrated because they hadn't done that previously, but they wanted to utilize their bank, which I respected. But we've got to understand the hour difference and the process difference, and not every place is the same. That's why you guys have a slogan that we are not the banks.
Right.
Talk a little bit about before we go find a home, while we're under contract, and getting to closing and how that process works.
So here at the mortgage firm and on my team, we take a different approach than most people in the business. We value everyone's time. We think time is the one commodity that nobody can give back to anybody.
True.
So we don't want you spending your time, your money, your efforts out shopping for a home that you won't be qualified to buy once you decide that that's your dream home. So what we recommend is working with a realtor that just doesn't talk to you over the phone, ask a few questions, maybe run your credit, maybe not, and then shoot you a pre-approval letter. We do the same thing. You don't have to come in to talk to us, although we like you, and we would appreciate you coming in because we think when you not only hear what we're saying, but we can actually see the numbers, it makes a more pleasurable experience for you. But we take all your information, and then everything that we are going to need for the approval of the loan, we try to get up front, because what we don't want to do is issue a pre-approval. You're going to fall in love with something that you've never owned before, but you can already tell where your car is going to be parked, what you're going to put in this room and that room, and get to the closing table and say, sorry, you're not approved. So we take all that information up front, go through a very stringent diligence process on our part, because we want to make sure when we issue the approval letter, we have no doubt in our mind it's going to close. So if you're not working with a lender that does that, I would recommend you maybe try a different one, because you don't want to find your dream home and at the end not being approved for it. So once you're pre-approved, my best suggestion, and 99% of the time, is do not change what you've been doing that got you pre-approved. And when I mean that is, don't go out, hey, you know what? I got pre-approved, I got something in the mail, that's a credit card, it's 0% interest for 60 months. I have a credit card that I'm paying 10% interest on, so I'm going to open this one up and then I'm going to transfer. That is not what you want to do, okay?
Well, what if I didn't get it in the mail and I'm shopping and they're going to give me 10% off if I open my credit card today?
Politely smile and say no thank you, okay? What lenders look for, and I'm going to speak for most lenders, but especially my company, is we look for two things during the time we've pre-approved you to the time we close. Did you start any new trade lines? Meaning, did you start a new credit card? Did you sign up for something that would report? Maybe a gym program. Now, not all of them report, so if they don't report to the credit bureaus, then that's not something that you would go into debt. Some do. Okay. So you just gotta ask the question. You gotta ask the question, are you gonna report this to my credit? If it is, we need to calculate it in your debt, okay? Because it's not something that's traditionally reported, but if it's on your credit, we're going to report it.
I wouldn't have known to ask that question.
Student loans, that's one of the things that people don't even think, oh, I got a child in school, I'm co-signing on the student loans. Now, we're not saying you can't do it, but tell your lender, is this going to affect me? And if it does, we'll tell you, okay, this is how you handle the situation, okay, so it won't prevent you from qualifying for the house that we've already pre-approved you on. But the biggest thing is unless it's for your insurance or to get your utilities pulled on, nobody should be running your credit at that point in time, okay?
So let me just ask, it's July and you've pre-approved me and my child's now going to college and wants to be added to my credit card.
That's different. That's not starting a new account. You're just giving them authorization to utilize your credit.
But I'm not co-signing.
But that you're not co-signing. No, you're not. That's totally different. If you are co-signing them, that means you're inheriting new debt.
For a car, a credit card.
For anything. Yeah. Well, the biggest I'm just a co-signer. Well, whoever you co-sign that for and the company did not do a good job of educating. You're not a co-signer. You're just as responsible legally as you are if you were the only person buying it. Because if they miss the payment, they don't call you up and say, hey, we're going to report you late unless you make a payment. Too late. They report it, and then you find out after the fact.
So anything you do. So once I get pre-approved, if I think I want to do something, I should probably...
You should probably call your loan officer, because sometimes your car may die. Hey, I got to buy a new car. How will this affect me? And it shouldn't take us too long to, okay, if you do buy a new car, what's the expected payment going to be? And sometimes we'll say, yeah, you know what, there's enough room. Here's what we're going to need, and you can go ahead and buy the car. But why would you, if you could avoid doing it prior to the closing and wait after, why would you risk, putting your closing at jeopardy? But sometimes you need a car to go to work.
Well, I think sometimes you risk because you don't know.
Right. So call your loan officer up and say, this is what I was thinking. What would they recommend? And try to figure out a way that puts your approval in less jeopardy. But sometimes stuff happens and you got to do it. And it doesn't mean you can't. It just means, I tell you what you don't want to do is sign up for the car and don't tell your loan officer.
And while we're on credit, and it's not about what you shouldn't do, but what you should do, aren't there some things that you can kind of educate to help somebody get their credit up?
Oh, absolutely. We, depending on how long you've been in the industry, I may see an average of about 200 credit reports a day or a month. So if you multiply that for some, that's a lot of credit. So we've been educated. We know what's going to take to look at to get your credit up. Your best option and your best credit, if let's say you have 10 credit cards and they all have a $5,000 limit, you're going to get the best credit rating if each and every credit card has 10% of the balance or less. Okay. Same thing. Then, if you can't get 10%, then we go to 30. And that's where your loan officer really, shows his value. There's ways where you can actually, without increasing your debt, let's say you had 5 credit cards at 75% and 5 at 0. So we can make that 7 by taking 2 of those cards that were at 75%, shifting 25% or whatever the balance to the other ones. So we've already been penalized on the other ones anyway, so we're not lowering the score. But what we did is we've freed up 90% on 2 more cards, so it'll put your credit scores at a benefit because your exposure is less.
So it's really important to discuss your entire financial situation with your loan officer.
Yes, and don't go out and dispute. I'm going to dispute this, I'm going to dispute that. Most of the time, the dispute's going to cause more aggravation or more problems than you think it's going to solve.
Which I've had people tell me, I'm just going to go pay all this off. And I've said, wait, go talk to your loan officer, let them look at what you have and let them guide you. Because if you just go pay everything off, that could adversely affect you.
Well, I'll give you a great example is, I'm going to pay off this collection, or I'm going to pay off that. And what they tell me is they're going to pay it off. What they tell the collection is, hey, I'm going to get on a payment program. So your collection, you could have had a collection with one of your credit cards that's been on there for 5 years. Because it costs money to report to the bureaus, your collector may have stopped reporting 3 years ago. But if you call them up and say, hey, I'm buying a house and I'm going to start this up, they're going to start re-reporting your collection. And you've woken up a monster that didn't need to be waking up. So, especially if you worked for a seasoned loan officer, they would be the first person to say, hey, this is what I'm thinking about. And I know I have, tools and information that it's not available to the general public, that even if it's something that, I haven't run into the situation, I know the right person to go ask, or the right company. So don't try to self-medicate your credit. Work with somebody that understands it and that's been in the business a while.
So why is my credit score different when I pull it on an online system as opposed to something that you pull for a loan?
Okay, so depending on what month we're in, there's about 58 different algorithms used to calculate credit scores. And only a handful of them, I've heard as little as 6, as much as 8, are algorithms used that are supported by the mortgage industry. As a general rule, what you hear on TV or on the radio or an advertisement say, know your scores, they don't use the 6 or 8 algorithms that the mortgage industry uses. So there's usually a difference. Now, in my experience, the difference is we're usually a little bit lower than what you would get on a credit website. However, it can be the opposite. You can come in lower and ours be higher. And what I tell people is, in my opinion, I would not pay for a credit score that wasn't on a report, pulled by a mortgage industry, because I know that's a true score. What you want to do with these credit systems is look at what's on your credit. If it's reported accurately, then there's nothing you need to do to fix. But the truth is, 1 in 3 credit reports has an error.
Wow.
Okay? So however many people are listening to, 1/3 of you have something wrong on your credit report. Now, does that mean when we pull it, we're going to fix it? Some of the mistakes are to your benefit.
Right.
Okay? But what we're going to do is put you in a situation that gives you the best credit rate and the best possibility to get approved for a loan.
So we're going to come to you and we're going to get pre-approved. Then we're going to go find our home. We're not buying anything in the interim unless we run it by you and you say,
or you got to buy groceries, just maintain.
Right. Don't go buy anything extra.
Yeah, don't buy the furniture till after.
Right.
Don't put a down payment, any big expenditure, try to delay until after the closing.
So now that we're under contract and we've done all of our inspections and we're ready to go to closing, we're going to get a stack of papers to sign. How do we know what's right, wrong, what we should or shouldn't sign? How does that work?
Well, with us, when you go to a closing with us, you've probably seen 99% of every document you had except for the mortgage and a couple of government things prior to closing, because we've either had you sign it previously or we've gone over it and say, okay, this is what you can expect to do. Too many people don't even meet the loan officer. They don't want to see him. They don't want, can you just text me or email me everything? But the fact is, you're buying something that's probably going to be the most expensive thing you're ever going to buy. And you shouldn't go into a signing assuming that everything you sign is going to be true and accurate. Now, there's not a lot of changes you can make, but there's certain items that we definitely, and that's why we show up.
Right.
We're not counting on you to check. We want to make sure that this, and this is right. Because once it's closed, it's a solid contract. It's very hard to change. So we want to make the change before the loan's been funded, not there was a mistake and have to go back, because nobody wants to go back.
Right.
You don't want to get the seller back. You don't want to get the buyer back. Everyone wants to move forward and go on with their life.
And laws changed several years ago where back in the day, I would see the closing documents and I would see the title documents, which as a real estate agent, we don't see those things anymore. So what I've noticed is when we have a closing with the mortgage firm, the title numbers tend to match your numbers and we're signing documents and we're leaving. I've been to other closings that we literally were off by 2 pennies and sat for 3 hours. So what do you do differently to ensure that this paperwork's correct when the buyer shows up to closing, so that they're not wasting 3 hours of their day for somebody to fix a clerical error?
Well, the last thing you want to do at the day you close is wait. You want to go in, you want to sign, and then you want to move into your beautiful home. Before we send out the loan documents to the title company, we've already known we match. That's what we look for. Hey, do the figures match? As soon as we have that, I know the deal is done. There's going to be no issues. Again, somebody may have made a mistake, but and then we correct it on site. But it's very rarely a mistake in numbers, because that's what we do for a living. We have my closers, my funders doing the numbers. We have the title company. So you have 2 companies that specialize in working with numbers. That's all they do. Okay? If we match and they match, the chances of 2 people making the same mistake and getting the same outcome are slim and none.
Well, the matching's the beautiful thing.
Yeah.
It's when it doesn't match.
Yeah.
That's the drama.
But we wouldn't have sent it. We're going to address it
in advance.
Yeah. Oh, we'll work on that. Well, what happens if you have another loan that had something come up that you weren't expecting, you don't have the time to work on it.
Right.
When we send out a loan package, 99.9% we have what we want to hear. We match.
And then when somebody's getting a loan, I don't know that they always understand that once they sign their papers, those papers have to go back to you to get a funding number. So can you just explain briefly a little bit about what does that mean to a buyer?
All we're making sure is that all the signatures were done properly, all the dates were done properly. So when you're on your way back to your new home, you don't get the phone call, you missed the signature.
Right.
Okay?
And it doesn't take long.
No. Hey, you know what? You know, like me, if you read my handwriting, it would be a challenge to figure out what's a 9 and what's a 4. If it looks like a 9 and it should be a 4, my funder is going to say, hey, can you just either change that or write a new one in initial now while everyone's there? And how long does it take to write a date? 2 seconds. But you're going to be very upset if you get home and you're in the middle of moving and you know what? We didn't fund the loan because we can't read that and you have to come back.
Right.
So we're gonna make, you know, as much as possible that if there is a change that needs to be corrected, it happens before everyone leaves the table.
So if somebody's interested in purchasing a home, or let's even say they're under contract, but they're having an issue with their loan after they got under contract, all of a sudden they're being told, which I've had happen, we've got a problem with this loan. How does somebody contact you? Because I know you're able to mitigate that. You've done it on 2 homes for us quickly.
Yeah, a lot of times it's, hey, did they look at it this way? Because you don't want to start the loan process. If we can save the loan, it's just looking at it from a different angle. And, you know, that's why you have multiple people, because I may look at it and, oh, that makes sense. And they just didn't think about it. If we're able to save it, that's what we want to do. Now we have a happy customer who will hopefully refer it. But not every lender is the same, and we don't even have the same math, believe it or not, a lot of times. So you would think that would be consistent, but it's not. But they can call me, 407-353-3750, or if you want, you can go to our website, wearenotthebanks.com.
Thank you.